Right, good morning, guys. It's Chris from daxtrader.co.uk. It's the 15th of February 2018. It's about 9 o'clock. And this is the DAX technical analysis summary. We're also going to look at FTSE and EuroStoxx here. I've just run through these charts. So I'll just go through a summary of what we've discussed. At the moment on the DAX, we've got the TPO here. We've got a blue POC line that was taken out this morning after we broke through the value area high and the high of yesterday, and look to continue this kind of mini bullish move. For me personally, I'm looking for a long to come up to test the trend defining level, potentially of 650. So that's a pretty bold claim, but if we can get somewhere down towards the point of control zone at 275, that could be interesting for me. Just be aware that trading financial markets is risky. It involves the risk of losing all of our invested money. We're not providing financial advice here. This is for educational purposes only. So if you decide to trade off the back of any of these webinars, articles, or information on the website, please do so entirely at your own risk. Okay, I've drawn a few line sets on the various charts here, so I'm just going to have a look at a few of them. The first one is this 20-minute chart here. You'll notice a couple of the pivots that we've marked out. We've drawn a median line or a fork set through those three pivots, and you'll notice the price pretty much tagged the median line here before reacting at the lower median line parallel yesterday after that break through the wedge pattern that was forming. And we've now looked to form a test of the median line once more. I'd like to see something like that kind of pivot component there form around about that 275 line. If I get that, then it's a good opportunity for me to take a long towards the median line. Okay, we also looked at the, just try and collect my thoughts, action and reaction. And this is an interesting thing to get used to drawing. It's part of Alan Andrews' work. It's based on I've completely forgotten the guy who created this. Is it Newton? Law of motion, that basically for every action there's an opposite and equal reaction, and it does represent itself in the financial markets as well, believe it or not. So one example of that is this particular resistance line of the wedge pattern that was forming yesterday, and you'll notice that it acted as a press line. It was just pressing price below it, and then it broke lower, trapped a lot of traders down here because a lot of people would have seen that candle, then reacted to it by selling, and then of course it turned around and got a lot of them trapped. And you can draw parallels from this particular line, but I have a tool that will do that for me. If you draw this particular center line through here, then take a parallel down to the action point here, and then do the opposite and equal line on the other side, you'll notice how price reacted at that reaction line, which is interesting. It was only temporarily, albeit because it broke through it at the end of the session and continued moving higher this morning. But if you were going long from that little line there, you see where I've drawn the arrow, there was an ignition point there with a wide range bar relative to the previous. If you'd have got long on that, then that would have been your likely target area, which would have offered you a nice reward to risk. But now that one has kind of been busted, there is an opportunity to perhaps look at a second one, which is a wider one from here. These 2 points, if you draw a line across those two and take your action point down here, maybe there's an opportunity for us to trade up to this reaction line here, which is just below that 650 target we talked about a few charts ago. So that looks interesting. So for me, overall, as a summary on the DAX, I'm bearish below 650 because that's the major trend defining low, which would have been down here where that doji was formed. We probably are going to be looking to tag the underside of this center line, which will be somewhere in that green box. So for the minute, the leg that I'm trading is the bullish reaction leg. That's the swing that I'm looking to be trading. There's still a little bit of white room to move into above, but just keep your wits about you if you're going to do the same. So that's the DAX. On the FTSE, the major daily chart that I've got here is looking at a fork here with the three major pivots. I like the A line because we've got a tag on price action here, plus it cuts through the gap between these two candles on the move down. So that acts to me as a balance point, making this fork even more valid. So what I'd like to see from here is a reaction at the C point. We've got a bullish outside bar on the daily chart, which you don't see that often. Towards a median line is pretty much the goal, I guess, for FTSE in the longer term. Opportunities to get long perhaps will be a test of these zones down here. If we can get along from 71.60 up towards that line, you get a better reward to risk. Buying from current levels is a little bit more risky. On the 60-minute chart, what adds to the bullish idea is the fact that the most recent two lows, you can see bullish divergence on an oscillator, if you believe in that. If you draw a fork from these three pivots, you'll notice that price has already tested the median line. So in order for this move to continue higher, I'd like to see a zoom through that median line. Then you can maybe take a long on a retest. What I mean by that is zoom through, test it, and then you can trade up towards the upper median line parallel. That's one idea. On the 150 tick chart, similar kind of idea, just drawing on these little pivots. You'll notice that price is contained within this fork. The idea of breaking through that median line happened here. It tested it on the underside, still continuing to respect it, but you'd imagine that the upper median line parallel has to be a target in the short term for the FTSE. Okay, so again, what's my summary on the FTSE? Well, we had a very, very large bearish impulse leg here. So we're currently trading in the bullish reaction leg. That's the swing that we're trading. There is white space to move into above, but maybe looking to find a long from a lower level could be a better reward to risk opportunity. So yeah, going long here is kind of counter trend if you consider that the impulse leg is bearish. And EuroStoxx, I'll just pull that up. I haven't done any lines on the EuroStoxx yet. Didn't get around to doing that this morning. So the most important chart that I was looking at was this here, which is the TPO. It's the profile chart. So we're looking at about 7 to 10 days worth of profiles here. Yesterday's profile was a similar look to the DAX, pretty jagged. But what is interesting about the EuroStoxx compared to the DAX is that the last exposed point of control on the EuroStoxx has already been taken out on the DAX. So I'm talking about this blue line here, which if you draw a line back, you'll notice that 3 consecutive days worth of points of controls were all consolidating around a similar zone. So that makes that area even more valid for me as a target area, which is 34.20, somewhere in there. I'd like to reach get along to target that zone, but I'd like to get along from a lower level. And if it was going to be lower, I'd like to get it from there. A drop down to the point of control from yesterday, which is also the point of control from Tuesday. Yep. And then that gives us a better reward to risk opportunity to take along, put a stop somewhere under here, look for structure. Don't just do that automatically, but you know, that's 6 to 1. Now that is just randomly dropped a stop loss in there. You might want to look for a better one under a piece of structure. So they're the 3 main markets that we discussed in the webinar. We did briefly look at oil and gold, but I will go through those another day. So that sort of sums up what we were talking about. Hope you had a cracking trading day, and then to the rest of the week, I believe I'll be back again tomorrow with another webinar, so come and join us either for that or see the video on YouTube. Come visit the website for the article. Other than that, have a great day. Catch you later.